We recently talked about the preferential tax treatment of capital gains. This topic often leads to other questions like, can capital gains push my ordinary income into the next tax bracket? Well, there's some technical rules. That's what we're talking about today. And make sure you stick around to the end, especially if you're retired, because there's some important caveats if you're drawing Social Security and or you're on Medicare. So stick around. So to understand this concept, you have to have some foundational knowledge. You have to know the difference between tax rates on ordinary income and long-term capital gains. If you're watching this, I assume you probably know the difference because we're trying to answer a somewhat technical question. But I will link to the last video I just put up where I talk a little bit more about that. I used this table in my last discussion. This shows the tax rates on ordinary income. And if you look at the center column, this is for married individuals filing joint returns. You know, it shows that the first dollar after the standard deduction is taxed at 10%. That, of course, contrasts to the tax rates on long-term capital gains, where we actually have a 0% tax bracket all the way up to about $80,000. And this is what folks are so often trying to capture, and it's what brings up a lot of questions. For instance, if I realize an $80,000 capital gains, people will often ask, is that going to push my other income into these higher tax brackets? And likewise, if my capital gain is even just $1 above the 0% rate threshold, does that push my entire capital gain into the 15% bracket? Well, those are the questions we're going to answer. So let's get started we're going to look at three different examples. So real briefly, before we jump into the examples, I just want to explain this table, which we are going to use a version of this as we walk through the examples. We have in the center the tax rates for married filers, those filing a joint return, that is. And this is ordinary income in the center column. We have long-term capital gains in the right-hand column. And furthermore, we're going to zoom in on the bottom half because this is where most of the action happens for the vast majority of people. So let's start out with our first example, Warren and Susie. They have the following income for 2021, $40,000 of W-2 wages, $30,000 of long-term capital gains from some stock sales. They're taking the standard deduction. So let's take a look at kind of how that would flow through an income tax return. Well, here's their wages plus the capital gain. That's going to equal $70,000 of adjusted gross income. They're going to take their standard deduction and end up with $44,900 of taxable income. The real question is, how is that income taxed? Because some of it's ordinary income, some of it's a capital gain. Well, this gets into the so-called ordering rules that the IRS uses to make that determination. And to cut to the chase, ordinary income is always taxed first with capital gains stacking on top. So in other words, to answer the question of this video directly, can a capital gain, long-term capital gain that is, push my ordinary income up into a higher tax bracket? The answer is no, and we're going to see that as we walk through these three examples. But here we go. Let's jump into it on the bottom. So I should also note, for the purposes of the standard deduction, that is also subject to the ordering rules, meaning that the standard deduction always offsets ordinary income first. So we have $40,000 of wages minus the standard deduction, $14,900 of ordinary income, plus our $30,000 in capital gains. Now in terms of determining the tax rate, so here's that $14,900 of ordinary income. That's all going to fall in this first tax bracket, the 10%. It doesn't even completely fill it up. So all these dollars are taxed here. But for the purposes of determining what our capital gain is, the IRS uses taxable income, total taxable income. So even though these dollars are taxed in the center column, they count in the long-term capital gains column for the purposes of determining the tax rate. So $14,900 plus 30 is $44,900. And fortunately for Warren and Susie, their taxable income is still within the 0% long-term gains tax bracket, which means their $30,000 long-term capital gain gets that preferential treatment for 2021. All right, let's look at example 2, and we're just going to change the figures a little bit to kind of see how that changes things from a taxation perspective. So we're going to double Warren and Susie's wages to $80,000. and maintain their $30,000 long-term capital gain. So I'm going to drop right to the bottom. Again, the standard deduction always offsets ordinary income first. So they're going to have $54,900 of ordinary income and $30,000 in their long-term capital gain. So their $54,900, that obviously fills up this bottom tax bracket and pushes them up into the 12% bracket. But remember how the tax rates work. The entire $54,000 is not going to be up here at 12%. They're going to pay 10% on the first $19,900 of this $54,900, with the balance being taxed at 12%. And the same is true for their capital gain. Now, Warren and Susie, their $84,900 of total taxable income is filling up this entire 0% tax bracket and is actually getting up here a little bit into the 15% tax bracket for long-term capital gains. So how does that play out? Well, likewise, it means they're going to be paying income. They're going to be paying tax across two brackets. So most of their $30,000 long-term capital gain is going to be in the 0% bracket, specifically $25,900. And this is supposed to say 0. That's just an error. So this little bit, this $4,100 that exceeds the 0% bracket, that's going to get taxed at the 15%. So here's a good illustration of what happens as you cross brackets with different types of income. So our last example, and this one really shoots at the heart of the question that we're trying to answer in this discussion. We're going to change the numbers again. We're going to say Warren and Susie, they only have $30,000 of W-2 wages, but they're taking a $150,000 long-term capital gain. Well, the standard deduction is going to offset almost all of their ordinary income. So let's take a look at how this plays out. So their $4,900 of ordinary income, that's just going to, fill up a little bit of this 10% bracket. Now their $154,900 of taxable income, again, remember the 150 stacks on top of ordinary income, that is going to fill up the entire 0% bracket, and it's going to be well into the 15% tax bracket. But again, what we're experiencing is we're just going to be paying tax across multiple rates. So about half of the capital gain, $75,900, is going to be taxed at 0%, with $74,100 being taxed at 15%. Most notably, and this again directly answers the question of this video, will a capital gain push my ordinary income up into these higher brackets? And as you can see, the answer is no. Capital gains are always stacking on top and in addition to ordinary income. Now, even though generally speaking capital gains, as we demonstrated, won't push ordinary income into higher rates, there's some caveats for retirees that are drawing Social Security and are on Medicare. So, capital gains do increase your adjusted gross income, and that is always an important number. First of all, if you realize enough capital gains, it's going to make more of your Social Security taxable. So in a roundabout way, in this instance, a capital gain could push your ordinary income up because of the way in which Social Security is taxed. And I'm going to save that for another video because it's kind of a whole issue in and of itself. The other thing you have to be aware of is when your adjusted gross income goes up, at some point that can impact the cost of your Medicare premiums. Okay, so long story short, if you're looking to realize some significant capital gains, at the end of the day, despite everything I said here, you still want to make sure you run it by your tax professional because there's always traps to fall in. And if you're not diligent, it's easy to miss something. So I appreciate you tuning in today. Hey, look, we're almost up to 100 subscribers on YouTube, so help me get there. If you enjoyed the video, hit that subscribe button. I hope we'll see you on the next one. Thanks so much.